On All About Stocks this week, Midcap Shine and Trade will tell you what your investment strategy should be. Our investment advisor Gaurang Shah will tell you why you should be investing in HCL for the long term. And Gaurang has made a profit of 106% in his portfolio. We'll tell you how he did it. Welcome to All About Stocks. Thank you so much for tuning in. I'm Faye D'Souza. It is a wonderful market to be an investor. The market seems to be going from strength to strength and offering us opportunities to get in along the way. If you want help with your strategy on investing in these stock markets, that's why we're here. Over the next half hour, we'll answer all the questions you sent in during the week and we'll help you work on a portfolio that will help you make the most money possible in a market like this. Remember, our email ID is at the bottom of your screen and you can reach me personally on Twitter as well. First, let me bring in my colleague Ajay, who will give us an update on everything that happened in the market this week. Ajay.
Well, Faye, it was a week of consolidation to just minor losses as far as the benchmark indices go. We've lost about 0.5% to 1% as far as the Nifty or Sensex goes this particular week. But broader markets, it was a different story altogether. Look at Nifty Junior, which houses large mid-cap companies, gained about 5% this week. Even the BSE Mid-Cap Index, which hit a fresh lifetime high this week, gained about 3%. But yes, the Nifty and the Sensex were relatively soft. In fact, the Nifty for the entire week, before collapsing a little bit on Friday, traded in a 60 to 70 point range. So it was very range bound and narrow. Broader markets is where the the big party was actually going on, especially triggered by dovish commentary from the RBI governor, though on expected lines, indicative that early next year the rate cut cycle could actually start. That sparked a lot of buying in interest rate sensitive, be it capital goods, defense stocks, mid-cap real estate, and high beta stocks did witness some amount of trading action this particular week. Global cues were relatively supportive. In fact, the talk of added stimulus from the Chinese economy also aided sentiment globally. ECB meet was also in line with estimates, no timeline given, but assurance that as required, ECB is ready with a larger stimulus package. So that all of those things really supported global sentiment, but the action was more pronounced as far as the broader market goes this particular week.
All right, Ajay, thank you for that update. Joining us today, Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, it's always a pleasure to have you on this show. Like Ajay was just telling us, it was a very interesting week for mid-cap stocks. And it is one of those weeks where we're seeing or we're hearing a lot of mixed messages when it comes to investing or buying mid-caps. There are some schools of thought that tell us that we should be very cautious when approaching mid-caps. There's another school that believes that if you find the right stock, there's a lot of money to be made through mid-cap stocks at this point in this market. Which side of the fence are you on?
Well, I'm definitely on that side wherein you need to identify sectors and stock ideas in the mid-cap, because I guess going forward from here on, the way you are hearing a lot of participants in the market talking about the view on the mid-cap index and of course the stocks performing. We also do have a couple of positive coverage on sector-specific mid-cap stocks. We do feel that there are going to be multi-bagger ideas going forward from here on coming in from the mid-cap. But again, I think the advice to the viewers of your show and your channel is that you need to be extremely careful and cautious when you are identifying opportunities in the mid-cap, and especially when you are wanting to venture into the small-cap arena, because that's where I think most of the retail investors get caught, and then they land up into a situation wherein they are caught between the devil and the deep blue sea. So we do believe that themes from the investment angle in the mid-cap is definitely there, but you need to identify right stocks.
Well, if I were to ask you to help me identify the right stocks in this market, what would that, how would you put together a checklist that would help me pick out the right mid-cap in a market like this one?
Well, I think first of all, you have to go by the earnings seasons. That's the great indicator of how the mid-cap stock is doing in a particular sector. Case in point, I'll just highlight, since you put forward that question to me. I think private sector banks, let's take it mid-cap. You see the names like Axis Bank and IndusInd Bank, IndusInd Bank and Yes Bank. I think the kind of numbers that these banks, private sector banks, mid-cap have thrown up have been extremely positive. And the kind of re-rating that these stocks are getting in terms of targets upwards is really very soothing to see. You take a case in point for mid-cap IT for names like Persistent System, Mindtree, HCL Tech, case in point, again, great performance. In terms of some of the selective names in the FMCG pack, again, you've seen names like Dabur and Marico and Godrej Consumer Products deliver extremely great set of numbers, and I think the kind of product profile that they have and the commentary by the management in terms of investment and growth going forward, it speaks tremendous amount of confidence. There are names in the energy side also. You have names like Petronet LNG, you have names like Gujarat Gas. I think you need to be absolutely sector specific when you're banking on the India growth story going forward from here on, and what are those sectors which are going to lead to that great growth story going forward. So I think you are definitely going to see the mid-cap names selectively perform much better compared to their peers in the same sector.
You know, Gaurang, while we're on the topic, we should also talk about the government's disinvestment drive. And for those of our viewers who are unfamiliar with what's going on, the government has set to divest 5% stake in state-owned SAIL, which received an overwhelming response on Friday. Now, granted, this is a really small chunk of the total budgeted disinvestment plan that the government has. It's likely we'll see a lot of that happen before the union budget in February. So after SAIL, depending on the appetite, there'll also be Coal India, there will be ONGC, NHPC, Power Finance Corp and REC as well. Gaurang, when you look at this entire list of PSUs in the pipeline with offers for sale, where do you think the most interest will be for retail investors?
Well, first of all, just because you bought this investment from the government side as a case in point, let me say that, you know, before the budget comes in 28th Feb 2015, you are going to see a rush by the government as far as the divestment process is concerned, and that possibly will see a flood of you know, paper coming into the market, secondary market from the government side. And there could be a case wherein liquidity could possibly get sucked out for a certain time. You may see markets correcting and consolidating, and that's going to be healthy, and that's where we feel there's going to be an opportunity for all those people who have been you know, feeling left out or waiting on the sideline to get into the markets. That's going to be an opportunity. Secondly, amongst the names that you listed out, I think two names I can identify over here as a disclosure. We do have a positive coverage. ONGC and Coal India, I think they are going to be the one that is going to generate the most interest in terms of retail participation.
Sagar has written in, he has 350 shares of Adani Power, which he bought at 47 rupees. He wants to know if he should hold on to that stock. Stock ended the week at 44 rupees. What's your call on Adani Power? The quarterly numbers were not very encouraging. What would you recommend he does?
Well, I think the entire power sector, power generating side, rather is definitely going to take a while for showing signs of recovery. And it is going to be a long time, and it is still work in progress from the government side. As a disclosure, we do have a sell call on Adani Power. I would advise him to get into a Dish TV on possibly current levels or any lower levels correction that I mentioned that will come in. If you see Dish TV heading it lower, we have a target of close to about 75 or so.
All right, another very quick question. Veerabhadra has written in, he has 120 shares of PC Jewelers, which he bought at 220 rupees. Should he hold on to that stock? Stock on your screen right now. PC Jewelers ended the week at 239. The stock rallied after those, the import curbs were relaxed a little bit on gold. But what's your call on PC Jewelers and all of the other businesses that are involved with gold right now?
Well, again, over here, it's going to be excise duty cut is the next thing that the gems and jewelry export sector is expecting. But that will have to wait till the finance minister announces budget in Feb 2015. Or maybe intermediate, you might see some related announcement coming through, which may keep this gems and jewelry export side sector in focus. We prefer names like TBZ or Titan Company. As a disclosure, we do have a positive coverage on both these stocks. However, Titan and company is trading very close to our price target. So I would advise him, if he wants to stay in the same sector, TBZ is a better choice with a 1 year plus target on TBZ at about 180. Disclosure, we do have a positive coverage.
All right, a positive coverage on TBZ. We're going to now pull up Gaurang's report card. Gaurang recommended HUL when it was trading at 761 rupees on the 7th of November this year with a target of 800 for a year. Gaurang, HUL ended the week at 820, which means it's already crossed your target in less than a month, really. What would you recommend we do?
Well, for those who bought in, since the target is in place, my advice would be to take money off the table. For those who are hungry for more, keep a profitable, trailing target in mind and ride the rally on the upside. As a disclosure, since market is in a super jubilant mood, We need to go back to our work tables and rework on our targets on the upside for some of these frontline names in some of the selective sectors. But like your question was, what should one do? Well, if you are of a low risk appetite, take your money off the table. If you are greedy for more, keep a profitable trail in the place and ride the upside.
All right, right to the upside, which is why we take Gaurang's recommendation so seriously. This week he brings us HCL Tech as his recommendation. Gaurang, given how the stock has moved over the last couple of years, and that's on your screen right now, how much more headroom does HCL Tech have?
Well, we have actually set aside a target of 1950 from a 1 year plus time horizon, and we believe, and these targets are post the recent numbers that we saw from the IT pack, especially HCL Tech. Now, if you look at the commentary from the management, they sound extremely confident about their business going forward from here on. They also mentioned that they are looking at high margin products, wanting to get into new products, and of course new geographies. Now, we put these equations together, and of course you take into consideration the recovery on the global side and on the domestic market front. I think given the kind of focus that the government is putting out in terms of technology and of course Digital India, optical fiber grid network, making services available to the remotest part of India, I think that's where information and technology is going to play a very crucial role. So a recovery on the domestic market for IT business, and of course growth looking stronger as far as the overseas businesses are concerned. We believe that the stock is presently going through a consolidation period, but the downside from current level looks absolutely limited and restricted. So one can definitely initiate small buys at current levels in case if you have a low risk appetite, and add to it whenever the stock corrects. But keep a target of about 1950 from a 1 year plus time horizon.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us figure out a strategy for our long-term portfolios. Now, Gaurang designed a portfolio on this show on the 14th of December 2012. We've been tracking it ever since. He's been making changes whenever he felt the need. That portfolio is currently at an overall gain of 106%. The Nifty over the same period, if we do a quick comparison, is up 45%. Well, it's a fantastic portfolio, and I'm going to give you a list of the stocks first so you can write them down if you'd like. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Vocart, Mindtree, Apollo Hospitals, Eicher Motors, and Infosys. Gaurang, we keep coming back to this week on week. It is a wonderful market to be in, but this is a stellar portfolio. Tell me something, when you look at your portfolio at this point, and there are some stocks like Havells that's up over 300%, Mindtree is up 250%, so is Eicher Motors. Do you feel that maybe you need to take something off the table at this point, maybe take some of the profits back into cash, or do you think that you're fairly secure where you are right now?
Well, first of all, I should thank you, your producer, and the entire team at ET Now for giving me this opportunity to make this portfolio way back in December 2012. And I think we are just about to complete, or we are completing 2 years of this portfolio. And during that time, I did some mistakes, and I did bite the bullet. I have booked loss. I've taken some remedial steps, and I've switched on to other stocks because there was some underperformance in some of these stocks that when I initially made out this portfolio, model portfolio. So that's the message that I'm trying to send across to your viewers, that you may make mistakes in the stock market. You're not always right 100%, but take those remedial steps to make those mistakes. You need to correct them, and of course, rethink on your strategy. If you want to book losses, you have to book losses and look at something else. In terms of this portfolio and the returns that I'm getting, actually, if you look at the names that is there in this portfolio, most of these stocks are now getting re-rated by brokerage houses, both domestic and foreign, and you are seeing upward revised targets coming in. I am in a very comfortable position, though I am making somewhere 100%, somewhere 200%, somewhere 300%, somewhere 40, 50, 30%. I don't want to be in a hurry. I don't want to be rushing and booking out of just because of the kind of returns that I'm getting. This is the whole story, that if you identify a stock at a particular time, and if you give it time, and if you see those stocks grow in terms of getting return on your capital, then I think you should just stay invested, and of course reviewing it over a period of time. And that's the reason that I don't think that I want to rush in and book money off as of now. Maybe in the next couple of months we might have a relook at it, and we will do this show again, and that's the time when in I would possibly, want to churn out book profits in most of these stocks that I have in this portfolio.
All right, so remember, these portfolios were designed to illustrate how buying a stock, choosing the right stock, designing the right portfolio and holding it for the long term will actually pay off. And this is what Gaurang has managed to illustrate for us. I'm going to give you the list of the stocks one more time. There are 10 stocks divided equally across the portfolio: IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wokat, Mindtree, Apollo Hospitals, Aisha Motors and Infosys. If you have any questions about this portfolio, about anything else you heard on the show today, feel free to write to us. Email ID is at the bottom of your screen. We'll have Gaurang answer your questions for you. Gaurang, we have a question for you from Sai Krishna, who wrote in saying he holds 100 shares of Crompton Greaves bought at 180 rupees and 100 shares of Andhra Bank bought at 83 rupees. Should he hold on to both of those stocks? Let's talk about Crompton Greaves first. Hold on to Crompton Greaves?
Yeah, fair. I would definitely advise him to hold on, and as a disclosure, we have set aside a target of 245. This is a disclosure from my side. We believe that the domestic business is going to see a major turnaround, giving the kind of investment interest that we are looking at, industrialization, etc., electrical appliances being in place. We have also have a trigger on this counter in terms of consumer goods business being hived off and listed at a separate entity. I think that is going to create value unlocking. We believe that going forward from here on, the contribution from the overseas business, which has been actually a little bit negative on the balance sheet and performance quarter on quarter, year on year, should definitely turn around over the next 1 or 2 quarters, again contributing to the top line and bottom line. So hold on to it for the target of about Crompton Greaves. You can hold on for a target of about 245. On Andhra Bank, I would advise hold. We have a positive coverage as a disclosure, and since we are talking about interest rate cut, I think banking is definitely going to be in focus for some time to come. So hold on to both the stocks.
Let's take another question. Raman has written in. He has 1,000 shares of IDFC, which he bought at 146, and also Federal Bank at 129. Should he hold on to both of those stocks? The IDFC hit a 52-week high this week, and Federal Bank was at an all-time high fairly recently. Same answer as you gave for Andhra Bank. As long as you're holding a bank before the interest rate cuts, it makes sense to hold on to it.
No, I think both these stocks are trading at a target price. So, since we are seeing our target price achieved, it is always prudent on our part to advise to book profits. Now, in case if the gentleman wants to hold on and trail the upside, then depending upon his risk appetite, he can definitely do that. But if he is wanting to book out profits, I would advise him to switch to DCB, which timer again we have been advising for a very, very long time. We have revised our targets to 126 on this one. And we believe that the numbers are going to be quite better than what we've seen over the last many quarters and years on DCB. On the Federal Bank, I think again trading at a price, so book profits. If you want to switch, IndusInd Bank would be the one that I'll be recommending over here. And now we have revised our targets on IndusInd Bank at 860, given the kind of performance. And this is one mid-cap private sector bank where, if I'm not mistaken, has actually made a new 52-week high.
Well, Rangareddy Venkat has written in. He has 1,000 shares of Apollo Tyres, which he bought at 200 rupees. He wants to know if we should hold on to that stock. The stock ended the week at 235. The thing about Apollo Tyres is, if you look at the auto numbers, they haven't been very encouraging, not even in November. So, Gaurang, should we hold on to Apollo Tyres, waiting for that consumer sentiment to pick up? Do you think just the replacement tyre market will be enough to keep the stock ticking? What's your opinion at this point?
Well, I think this small slip is a very minute blip actually in terms of month-on-month numbers. And we believe that given the economic revival and growth, it's going to be a very good time for the entire auto sector, both PV segment, LCV segment, MCV segment, HCV segment, SUV, UV segment, etc. I'm talking about two-wheelers and four-wheelers, both in terms of autos. So if you are going, and of course interest rate cuts which are likely to come through in the near future, maybe it will act as an indirect positive impact on the auto stocks. That's going to be another trigger which will augur well for the entire automobile pack. Now, if you are going to be positive on the auto pack for these reasons, I don't see any reason why you need to be negative on auto ancillary, especially on tire manufacturing companies, because it's not that they have only new orders that they are waiting for, but the replacement market itself is a huge market for these tire manufacturing companies. And of course, the rubber prices in the commodity market are historical low levels, which again augurs well for tire manufacturing companies in terms of expansion of margin and profitability. So hold on to Apollo Tyres with a target of 275 as a disclosure, a positive coverage. Your time horizon should be 1 year plus.
Right, hold on to Apollo Tyres as well. Remember, if you have any questions for us, write to us. Email ID is at the bottom of your screen. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us figure out a strategy for our long-term portfolios. Gaurang, we have a portfolio to look at. Vishal Singh has sent us his list of stocks. He wants to know which of these he should hold on to and which he should sell. Right on top, 57 shares of Oil India, which he bought at 587 rupees. Over the last week, if there's anything that's being talked about across the world, it's the price of crude oil. What do you think it means for stocks like Oil India? It has sent, oil producers across the world into a huddle right now. Should we be worried about price of crude if we're holding Oil India?
Well, I think for oil marketing companies like BPCL, HPCL, and IOC, it's extreme positivity because they definitely have much more, growth going forward from here on in terms of lower crude oil prices coming through, and their profitability multiplies multiple times. For oil exploration companies across the world is a problem, but in India, for names like Oil India and ONGC, I think it's going to be a short-term negativity. And the biggest positive trigger is going to be reduced subsidy burden, and of course the revised formula in case of the oil ministry and the government of India puts in place in terms of subsidy sharing, then I think it's going to be extremely positive for oil exploration companies. So overall, we feel that it's not going to be negative, it's going to be a short-term overhang, but you definitely need to stay invested, especially in a stock like ONGC. Again, like we discussed earlier on the show, that there is going to be an offer for sale. We don't know what valuation that offer for sale will come through, but in case if there is going to be any small discount from the CMP where the stock is trading, I think it's going to be an opportunity to buy. So I would advise this gentleman to come out from Oil India because it is trading at our target price, and switch on to ONGC in case if he is interested in the exploration side. On ONGC, if he is shifting on, then from a 1 year plus time horizon, you can look for a target of 465.
All right, our next stock on his list, 169 shares of Lupin, which he bought at 416 rupees. So he's making a fair profit on Lupin right now, Gaurang. Hold on to it further?
Yeah, you can hold on to it, but given the kind of profits that he's making, I think I'm tempted, though I am myself not booking profit on my portfolio, but I would definitely tell him that, take at least your capital home and some profit so that you can sleep peacefully at night for the balance investment that you will have in Lupin. Our target is about 1500 on Lupin.
All right, let's move on to the next stock, Tata Global Beverages, which he bought at 104 rupees. Well, we all enjoy our Starbucks now, Gaurang. Hold on to Tata Global Beverages as well.
Yeah, and that cup of tea as well, along with coffee with Starbucks. So yes, we do have positive coverage. We are looking at a target of 182 on Tata Global Beverages, and I feel there is going to be some issue in terms of tea supply across the world, and that's where names like Tata Global Beverages will play an important role because they are not only present in domestic market, but they have presence in Middle East, Europe, and US, and there seems to be some edge in terms of earnings visibility.
All right, one last stock we're going to quickly bring in. 50 shares of M&M Financial bought at 263 rupees. He's making a profit on this stock as well. But what's your call on M&M Financial and all the other NBFCs in the market at this point?
Well, I think after a long period of consolidation, we've seen the stock move up from 235 to 245 where it was languishing fair. And given the interest rate cuts, I think this augurs well for the entire banking interest sensitive and NBFC category. That's where M&M Financial comes into place. But it's trading at our target price, so my advice would be to book profits. And if you want to switch on to Tech Mahindra, wherein we have a target of about 2850.
All right, Gaurang, before we wrap up the show, is there a disclosure that you would like to give our viewers?
Okay, the disclosure from my side is that I don't have any personal holding or investment in any of the stocks or sectors that we have discussed. But yes, these are the part of the recommendations that we give to our clients.
Many thanks, Gaurang, for joining us this weekend and answering our questions. It's a pleasure, as always, to chat with you. If you have questions for any of us, write in. Email ID is at the bottom of your screen. You can also reach me on Twitter. Send in feedback that you have about the show. Thanks for watching.